Get started. So hi, everyone. I'm Beth Gantz. I'm the director of the Small Business Development Center at Lorain County Community College, and I'm excited for this workshop today in partnership with the Cleveland area SBDCs, Lakeland Community College, the Cleveland Urban League, Cleveland State University, and the Northeast Ohio Hispanic Economic Development Corporation's SBDC. So thank you all for joining us. I'm at, again, Lorain County Community College, and we're joined by the Department of Taxation to have this sales tax workshop. So Amanda and Joseph, thank you so much for doing this for us. And I will share our screen and we'll get started. So I'll be sharing the screen, everyone. So bear with us as we do this. So if you could hold your questions till the end, that would be most helpful. There's a lot of information to get through. So even putting them in the chats will be a little cumbersome, but certainly you can do that. But we'd prefer that you wait and just write your questions down and hold them till the end. So Joseph, I'm going to turn it over to you.
All righty. Thank you, Beth. Appreciate it. So welcome everybody to the webinar titled Ohio Sales and Use Tax for Small Businesses, the Basics. This is a high-level overview of the basics of sales and use tax, and we'll also be covering some certain scenarios. My name is Joseph Rocky Swartz. I am an assistant administrator in the Business Tax Division within the Ohio Department of Taxation.
And my name is Amanda Fletcher. I'm a tax examiner manager here in our business tax division.
Okay, let's get started here. We can go to the next slide. We always have to add our disclaimer in these presentations since tax laws change so frequently. The information presented in this presentation is as accurate of the date of this presentation. Any legal changes that take place after this date may change the accuracy of this content. Changes to the facts and circumstances for each scenario may also impact the answers. An example of this is the same item or taxable service could be taxable or exempt, based on the usage. So this slide is just the overview. Today we'll be going over general sales and use tax information and taxable services. We'll cover exemptions and exemption certificates. We'll also be covering online nationwide sales, crafts for sales. We'll cover the lawn and landscaping taxable service, everyone's favorite, the food definition. We'll cover some consulting scenarios and some licensing and filing requirements. And we'll also provide some insight to our new e-services platform. So for general sales and use tax, the sales tax was enacted in 1935. The tax was originally enacted as a temporary tax, but here we are 90 years later, still discussing it, and it's probably one of our most complicated tax that we have. The opposite of sales tax is use tax, which was enacted a year later in 1936. Sales and use tax creates a level playing field for both in-state and out-of-state vendors. All states that have a sales tax also have a use tax. All sales of tangible personal property, TPP, so you'll probably hear that reference TPP a lot in this presentation, tangible personal property. So all sales of tangible personal property are taxable unless specific exemptions apply. And however, there are only certain services that are taxable services. Next slide. So the next three slides, I'll be going over just a brief list of our 21 taxable services. These taxable services are found in Ohio Revised Code section 573901B3. We like to refer that to as our B3 services. Keep in mind that there are informational releases on our website for almost all of our taxable services. Our informational releases basically helps explain the law and what's taxable and what's not. So that's a very useful resource. So now to get through our taxable services, we have the repair of TPP. An example of that service is a car mechanic. We have the installation of TPP. That example of that is a carpet installer would be a taxable service. Washing a motor vehicle is a taxable service. An example of that is a car detailer. This does not include like the coin operated car washes or the credit card operated car washes. Next, we got laundry and dry cleaning services. An example of that is this is laundry that's not done by yourself. So more of a dry cleaning business would be a taxable service. We also have ADP and EIS for businesses. An example of that is like a payroll service. Telecommunications is a taxable service. An example of that is our cell phone companies. Then we have the lawn and landscaping service. Last one on this page is the electronic publishing service. A good example of that is a company like LexisNexis. So for the next side, just some more services listed. We have private investigation and security is a taxable service. Also, building maintenance and janitorial is a taxable service. Exterminating services are taxable. Towing wrecked, disabled, or illegally parked motor vehicles is a taxable service. And then snow removal is a taxable service as well. All right, the last slide for our taxable services, we have rental of hotel rooms or similar accommodations. This will be the rental of less than 30 days would qualify for this as a taxable service. Informational services through 900 number. The caller pays the tax on that one. Production of TPP from supplied material is a taxable service. A good example of this is like a tailor. If you take your pants to get them hemmed, you know that you're supplying the TPP and they're just providing that taxable service. Physical fitness facility is a taxable service. We have satellite broadcasting services as also taxable. That's an example is like a TV or radio. Personal care service is also a taxable service. A good example of this is like a salon. It does not include hair cutting, coloring, or styling. Transportation of persons within Ohio is a taxable service. An example of that is a taxi or Uber. And then last is recreational or sports club services is also a taxable service. An example of that is like a golf course. So now, after talking about our taxable services, I'll touch base on our exemptions. We have over 100 exemptions and one exception. That exception is the resale. You know, the sales tax is only charged once. So if somebody is purchasing something to resell it and to charge the sales tax there, they won't pay sales tax up front. The purchaser must establish that they are entitled to the exemption. Narrowly exclude against the exemption. Narrowly exclude against the exemption means that if you fit, that you have to fit in order to qualify for the exemption. So if there are any questions, then you most likely don't qualify for the exemption. All of our sales tax exemptions are listed in Ohio Revised Code 5739.01 and 5739.02, but most of them are found in O2B. So unfortunately, we're not going to be able to go over all 100 of our exemptions today, but I will touch base on some very common ones. You know, the sales to churches, 501c3 and nonprofit charitable organizations are tax exempt for sales tax purposes. There's also the farming exemption for TPP used primarily in production of TPP for sale. Last one on this slide is certain sales to persons engaged in transportation for hire are exempt. This is like third-party freight that are hauling goods for other. The big one with this one is, they get to purchase their truck exempt because, they're hauling goods for others. Some more exemptions here. This slide kind of touches on two of them. The materials incorporated into TPP produced for sale by manufacturing. This is like raw materials that are being incorporated into the finished product. We also have the public utility exemption. And then the next one is to use the things transferred primary and production for TPP for sale. This one kind of goes with the first bullet point for manufacturing. This exemption applies to the manufacturing equipment. And then the last on this slide, we have handling purchase sales inventory are exempt. An example of that is like a warehouse distribution center. All right, so for the next slide, we're going to be going over the exemption certificates. If the consumer claims the purchase is exempt, the vendor must obtain the certificate within 90 days. By obtaining this certificate, the vendor is relieved of the liability for sales tax on that purchase. So for the advice for small businesses, if somebody is purchasing one of your items and they tell you that they're tax exempt, it's important to get this form completely filled out and on file. That way, if anybody would ever ask you, why didn't you charge sales tax on this transaction? You would say, the customer provided this form, and that would take the liability off the business and then put the liability onto the customer that filled out the form. If the certificate is not obtained within 90 days, the vendor does have 120 days to establish the sale is not taxable or obtain a certificate in good faith. So I did mention the fully completed certificate. So what constitutes a fully completed certificate? This would include, the purchaser's name and business name and address is on the certificate. The tax ID number is optional. We like to tell people if somebody's claiming the resale exemption, then that tax ID number should probably be on there, showing that they're able to resell the product. However, there's a bunch of middlemen out there. So sometimes somebody's claiming the resale exemption because they're going to resell it to another company that ends up selling it to the end user. So there will be instances where the tax ID number is not on this certificate. But also requirements is the type of business, and the last two main ones is the exemption reason and a signature. So if the small business receives a fully completed exemption certificate, they do not have to charge and collect sales tax. So next here, I'll be covering a little bit of online nationwide sales. Keep in mind for Ohio businesses, the next couple of slides does not affect your Ohio sales, but it could affect your out-of-state sales. In 2018, the Supreme Court overturned the Wayfair decision, they overturned physical presence and added economic and virtual presence. This decision requires a taxpayer to have substantial nexus with the taxing state in order to be required to charge and collect sales tax. So the 2008 decision was really big. I know the big marketplace facilitators before this were not charging sales tax because they didn't have physical presence in the state. After the Supreme Court made their decision on Wayfair, they now are required to charge and collect if they meet those nexus standards. Okay, next slide. So I mentioned nexus standards. We have a very useful information release on our website regarding the nexus standards for out-of-state companies. So keep in mind, this is for out-of-state companies selling into Ohio. Physical presence creates nexus. Regular deliveries into the state other than means of a common carrier creates nexus. If you own or lease or rent property in the state would create nexus. And then the big one is if you have taxable gross receipts in excess of 100,000 or 200 or more transactions would create nexus. So if you didn't meet the 100,000, then there's a possibility that you reach the 200 transactions. In this information release, there is also, 15 safe harbors. I won't be going through those today, but there are some safe harbors for companies to get out of for out-of-state companies to get out of collecting sales and use tax for Ohio. And then the last bullet point on that slide is use tax. And I always like to add that, our out-of-state vendors, they can voluntarily collect if they would like. If they don't, then their consumer ends up owing use tax. So it is a good business to customer relationship to collect for them and remit for them. That way they don't have to do it. So keep in mind, this is for out-of-state companies selling into Ohio. For small businesses in Ohio, when you're selling to other states, we recommend you contact that other state to see if you meet their nexus standards and if you're required to charge and collect their sales tax. So also regarding online nationwide sales, I did want to mention that Ohio is a part of streamlined sales tax. This is where states get together to uniform tax laws to try to ease the burden on the vendors. There are 23 states included that I have listed there on the left-hand side of the slide. Streamline is a nonprofit organization and a member's participant is strictly voluntarily. Next slide. This slide, we also have one associate member, Tennessee. So all those states kind of uniform their law and have very similar sales and use tax laws. So if you're selling with those states, most likely they will be comparable to Ohio. Also on the slide, I have listed the non-sales tax states. So there are 5 states listed there where if you're doing online sales and you sell into those states, you don't have to worry about collecting sales tax. On the other end, if they're not one of those 4 states, like I mentioned earlier, we would recommend that you contact that state to find out what your requirements are for collecting and remitting sales tax. So streamlined sales tax also includes local governments, tax practitioners, and the business community. So we all work together to try to simplify and uniform the laws. And that's all I have. And now I'll pass it on to Amanda for the next slide.
Thank you so much, Randy. So like I said, my name is Amanda, and at first I'm going to go over some of the topics that you all have asked about and showed interest in. So we'll touch on some of these topics, and then afterward, I'll go over a demo of our e-services online and show you all how to register and file and pay for sales tax. So I'm getting started on craft shows and online sales. So the vendor's license type, there's multiple types of vendor's license you can obtain. And depending on what your business is and the nature of your business, you may need a different type of license. So a transient license is needed for craft shows, meaning that your inventory is traveling with you. It's going to different locations. It's not out of the actual fixed location. So that's why craft shows need a transient license, because you may be in different counties, bringing your inventory along with you and selling them in different locations. For online sales, which we'll talk about as well, you need a county vendor's license, and that's simply because due to the nature of an online sales business, you're considered to be selling from a fixed location. So, if you have a computer at home, and your business is kind of ran from your home online, your house is going to be considered that physical place of business where your online sales are sourced out of. So for that reason, you would need a county vendor's license. Vendors that make sales in Ohio, but don't make sales from a fixed location. We'll source each sale to the location where that sale takes place. So, and just one comment. So for an example, if I'm in a craft show and I'm taking my inventory to Cuyahoga County and then Franklin County and Hamilton County, I would need to be aware of the rates in those counties and then charge a source and charge a sales tax for the rate that is in that county. So for online sales, sales made to Ohio customers are sourced to the location where that order is received. The sourcing is based off of where it's received, which isn't always necessarily the same place where the order is processed or shipped from. If the order is received at a location outside of Ohio, or sometimes the vendor doesn't capture the location where the order is received, they're treated as follows. The next slide, please. So if we're selling tangible personal property or TPP by an Ohio vendor, and it's delivered to a customer that's outside of Ohio, that's treated as interstate commerce and is not subject to tax. However, keep in mind that depending on the volume that you are selling to outside customers, you may want to just check in with those states just to see what their nexus rules are, because they may have rules that seem to have physical presence there, and you would need to collect tax. So always check with the other states that you're selling to for best practice. And for sales of services that are taxable, the list that Rocky mentioned earlier, those should be sourced to the location where the customer receives that service. So if I have a lawn care service or a cleaning service, and I clean houses or all around the state of Ohio, I would want to be sure that I'm sourcing that and charging the tax where the customer receives my cleaning or lawn care service. Under Ohio law, a service is received where the customer makes first use of that service. So while this may somewhat be terminology, it should be little change for most service providers. And then also, for example, repair services should be sourced to the location where the consumer gets the possession of that repaired object. The RC requires marketplace facilitators to source sales that they facilitate to the location where the customer receives the property or service that is sold. However, for an Ohio-based marketplace facilitator, direct sales, if the order is received in Ohio, the marketplace facilitator will source a sale to the location where the order is received. So now we'll talk a little bit about landscaping and lawn care, and then snow removal as well. So we place the definition here straight out of the Ohio Revised Code. Basically just goes over how we define it. So seeding, sodding, aerating, fertilizing, everything that's listed on this slide would be considered landscaping and lawn care. And then keep in mind, we do have an information release as well on our website that has a really neat and handy chart that goes over what is considered landscaping and lawn care and also what isn't considered. So if you're just wondering and maybe you buy this service and you're confused which ones would be taxable and which ones wouldn't be, I think that chart is very helpful for those who are in this business. And then the definition of snow removal is basically the removal of snow by any mechanized means. So this would not be referring to like manual, the teenager coming to, plow your snow off of your sidewalk for a little extra change. This would be more mechanized means, like a plow truck or what have you. And then for lawn care and snow removal, if you're providing these services during the last calendar year and your gross sales from each of these were under 5,000, you don't actually need to register as a vendor and collect sales tax. So I'll kind of break that down a little bit. What that means is in a calendar year, let's say that you've had a lawn care business for 2 years, and each year, maybe the first year you had $2,000 worth of services, and then your second year you're doing a little bit better and you had 4,500. You're still not at a point yet to where you need to register for a vendor's license and collect sales tax. So once you hit that $5,000 for the very first time, that's when you have to register for a vendor's license, and then start collecting tax until your business ceases. So even if you're, growing your business and then, year 7 and 8, you drop down under that 5,000, you're still not out of business yet. So you would continue to collect tax on the sales you have of those services until you cease business. And then keep in mind that the $5,000 is actually separate for both snow removal and lawn care. So it's 5,000 provision for snow removal and a 5,000 provision for lawn care. But keep in mind that this is not to be confused with a $5,000 exemption each calendar year, meaning, you don't have to collect each calendar year prior to hitting $5,000 on each calendar year. It's one time. The first time you hit it, you register, you begin collecting tax until that business ceases. All right, and moving on to the food definition. This is another topic of interest. We've put the definition here of what the revised code says that food is, which is sometimes different than what we may think. And again, we have an information release on our website, tax.ohio.gov, that has another great chart on it. It lists what is food and what isn't food. So this just goes over substances, whether liquid, concentrated, solid, frozen, dried, or dehydrated, that are sold for ingestion by chewing by humans and are consumed for their taste or nutritional value. It also talks about that alcoholic beverages are not considered food by definition, nor is dietary supplements, soft drinks, or tobacco. All right, so consulting services, just a frequently asked question. Professional, personal, and insurance transactions are not taxable when any transfer of TPP is a small item for which no separate charge is made. So per the revised code, and we've listed it here under Y2, personal and professional services means all services other than automatic data processing, computer services, or electronic information services, including but not limited to analyzing business policies and procedures, or what we would refer to as consulting. So consulting is analyzing business policies and procedures. There is a longer list of this definition, and we do ask that you see the revised code for the other parts of that definition if you're interested. All right, so now we'll go into licenses, registration, and filing. So you may be wondering, do you need to register? Or you may want to start up a business, depending on the nature of your business. You're asking yourself, do I need to? And so keep in mind, making a casual sale is not considered engaging in business. Engaging in business means, you're commencing or conducting or continuing a business on a daily basis. So for example, a casual sale of a motor vehicle, or a yard sale that you're having for one day, those would be considered casual sales and not necessarily engaging in business for purposes of sales tax. So when do you register? The department generally looks to the revised code to determine when a company is engaging in business. So there is what we call a 6-day rule. So if the number of days on which the sales are made exceeds 6 days in any calendar year, the church or organization shall be considered to be engaged in business, and all subsequent sales by it shall be subject to the tax. So for example, we talked about a yard sale, or maybe a sale at a organization. If they're just having it,
about weed.
quarterly
Really?
throughout the year, then you're not engaging in business. But if this is something that's going to happen, every 2 weeks or every month,
You feel
that
like
exceeds
shit for
so you would need
having Caleb's birthday, and
Oh, I'm sorry to interrupt. Can everyone mute themselves, please?
all right. And so how do you register? There are multiple ways that you can register. We do recommend online just because it is faster processing and you do get your vendor's license immediately. And so online at gateway.ohio.gov is where you would go to begin that process. If you choose to register in person, you can also visit your local county auditor's office and register there. And then we also have paper applications that are available on tax.ohio.gov/form. Keep in mind there is a $50 application fee, and that's due for each vendor's license that you register for. Okay, and a little bit of information on our due dates. So we have 2 filing frequencies in sales tax. We have accounts are set to either monthly or semi-annual periods, meaning every single month you're going to file and pay, or you're going to file and pay for January to June 30th, and then July to the end of the year. So regardless, the due date is always going to be the 23rd of the month after the reporting period closes. So for example, January would be due on February 23rd, so on and so forth. And then for those semi-annual periods that end June 30th, that July 23rd would be the due date for the semi-annual period. If for some reason that the due date falls on a weekend or holiday, we would actually have the due date the next business day. And just a reminder, a lot of times it's misunderstood that, if people have a vendor's license and they didn't make any sales during that filing period, that they don't have a filing requirement. And it's actually not true. So regardless of when, if you have sales or not during that month or that semi-annual period, you still have that filing requirement, even to file 0, as long as you have that active vendor's license. All right, and now we'll get into the Ohio Business Gateway and kind of go through a demo on filing and paying for sales tax. So OHID it's a personal ID that should be per person. So it's not just a login for access to our online portal to file. This would be for you as an individual. It is more secure that way. So every user has their own OHID, and that will allow you to access the gateway. Please don't share your OHID or password with anybody. That way it maintains its security. And next slide. Once you have your OHID and you've created that username and password, and you log in, that's where you will access the gateway. This is just a screenshot of the gateway dashboard, what we call My Business Dashboard. And so just a little backstory on, since December of 2024, our department has went with a new tax system called OH Tax e-Services, and that's what you'll be seeing here as we move forward. But in order to kind of get to the dashboard in e-Services, you'll click on the transaction through Gateway that is titled OH Tax e-Services, and that kind of connects you over to the new platform, which is where you'll register, file, and pay. So what you see here on the screen is going to be the kind of like the dashboard of e-Services. Once you click that link on Gateway, it takes you over to your e-Services dashboard, where you'll see these tabs at the top. One of these tabs is the additional services tabs, and then down here at the bottom, you'll see where it says register a new business tax account. So you would just click that link, and then next slide, please. Once you click that link to register, you'll select which type of license that you need to register for, depending on the type of business that you have. So if you're registering for a county vendor's license, you would just go ahead and click that link. And next slide, thanks. And then just fill in the required information as you would, any registration form. You're going to be asked when will you begin providing taxable sales? So you'll just enter that in that field. And then do you expect to collect more or less than $200 of sales tax per month? Answering this question determines your filing frequency with us, and whether you're going to be filing monthly or semi-annually. And keep in mind that that $200 is sales tax collected, not gross sales. Okay. Once you've done that, you'll click next. And then the next step is to complete the registration. Depending on the type that you choose, some licenses may require a registration fee. So after you've entered the needed information, you'll be asked to make a payment if applicable. And then you'll enter your payment information in the boxes. So once you've registered and you're all set up with your vendor's license, you'll need to know how to file and how to pay for your sales tax. And remember, this is the sales tax is collected from that end user. So essentially, as the business owner, you're just that middleman, and the state entrusts you to collect or remit that through your sales tax return, which is our UST-1. So from the dashboard of e-services, you'll see the sales tax. This is kind of, what type of tax or accounts that you have. For sales tax, you'll see a file now, or you can view returns and period balances if you have multiple months or periods to file for. So you would just click file now. And then file now navigates to the getting started page. This page will provide a list of Ohio locations associated with your business that will be filed on the UST-1. It displays the return, allowing you to complete the required information and then submit it. And then once the return's been submitted, it can be viewed from your dashboard. All of the history is saved in there, so you can view your past returns that you filed. And then once the county information box comes up, you'll click in that white box there, and a drop list will come down, and you'll select the county in which you collected sales tax for. If you have multiple counties, that's fine. You can just add another row and select the other county. And then you'll put your taxable sales and tax liability. So taxable sales is going to be the ultimate amount you ended up collecting tax on, and then the tax liability is the amount of sales tax that you collected from your customers. And then the next step is basically just kind of a summary, is showing you, okay, this person has 3 counties. They have the taxable sales and tax liability column, each separate from each other. And then once those are in there, you click next. And the taxable sales page, this is kind of a breakdown from the previous page. This requires you to have the gross sales and exempt sales. The exempt sales amount would be, Rocky mentioned earlier about the sales tax exemption certificate. So let's say that you had, 10 customers provide you the exemption certificate, and they totaled, $1,000 each or $2,000. That would be the amount that you put in your exempt sales, because you have reason to not collect sales tax on those gross sales. And then you would just do that calculation and make sure that your reportable taxable sales is going to be gross sales minus exempt sales. And then if you paid directly to the clerk of courts, this would be if you were in the business of selling vehicles, you would answer that question. If you do pay the clerk of courts, if not, you would just click no and move forward. And then this is the accelerated payment screen. The accelerated payment page prompts you to apply your payment to that following period. So I think the question was asked earlier. So if you were subject to accelerated payments, you would put that portion of your payment listed here, and then that will add to the amount that you're going to pay upon checkout. If you're not subject, you just keep that as 0. And then you click next. And then you're kind of near the end of the return. The review page, it requires you to kind of just glance over everything, make sure all the information and all the figures are accurate. Once you've reviewed that, you'll go ahead and click next. And then you'll be at your payment options page, which prompts the options available to remit your payment. So here we have electronic check, credit or debit card, and then pay later. Pay later would be if you're approved to pay by paper check, then you would select the pay later. and then you click next. For electronic check, this option allows ACH payment with no fees applied. So you would just fill in the amount, confirm the amount you want to pay, your payment date, and then you'll enter the banking information as well. And then if you choose credit or debit card, keep in mind there is a small fee. So that would be listed there in the credit card fee box, which is separate from the amount that you're paying for the tax. And then you'll go ahead and click next. And then you're going to confirm submission. This page prompts confirmation of submission of payment and of the return as well. Keep in mind that this, although you are confirming your submission, once we have your payment information, that confirmation is just that. It's confirming we received the payment information. It doesn't necessarily mean that that payment, was successful in posting for various reasons. So just keep in mind that the submission confirmation is that we received the return and we received the payment information. So once you're done, you'll click File My Return, and then here you'll see the confirmation page. It does give you a confirmation code, and then all of this, you can print it out if that works better for you. This is also stored on your dashboard of e-services, so you will have that for your records if you need to revisit it at a later time as well. So at this time, I'll turn it back over to Rocky.
Thank you, Amanda. Well done. This slide just gives you some resources that we have out there that we offer. Our website. I highly recommend that you sign up for tax alerts on our website. That way you stay up to date with filing deadlines and tax law changes and stuff like that. We also have FAQs on our website that are very resourceful. We mentioned multiple times through this presentation, the information releases. This is one of my go-to whenever I have questions, taxability questions. I'm always looking at the information releases. Another resource is our new e-services that Amanda went through. We have our general assistance phone number, and then of course the Ohio Revised Code and the Ohio Administrative Code. Ohio Administrative Code is, we come out with rules that our legal team helps try to explain the Ohio Revised Code better. So those are both key resources. Next slide. This slide just has our contact information, our phone number and email address. Don't hesitate to reach out if you had any questions or concerns. And then our last slide is just our general contact information for the department with our address, phone number, and email address. And so I would like to thank Beth and the small business community for giving us this opportunity to present. Much appreciated. And it does look like we have a little bit of time for some questions.
Well, thank you so much. We really appreciate it. This is at the Small Business Development Centers. I think we get asked daily about sales tax. And I just want to add that for everyone listening, the frequently asked questions page is amazing. That's where we start when we get our questions. So I encourage all of you to start there as well. And certainly then can contact the Department of Taxation or your SBDC for more information. But you also get this slide presentation. So yeah. So there are some questions in the chat. One is, does the minimum $5,000 sales provision apply to all businesses or just specific, which you did answer. I think it's really for like landscape and stuff like that.
Yeah, I like to mention that the landscaping and snow removal, it's kind of follows suit with the IRS because we like to save the neighborhood kid that, cuts their neighbor's grass or cuts we don't want that, 8th grader having to charge and collect sales tax. That's why we come up with that 5,000 minimum.
Yeah. And so then the next question is, how does the Nexus standard apply to micro businesses? Is there a general baseline for needing to collect sales tax in another state?
So yeah, the Nexus standards applies to all businesses. Keep in mind, our Nexus standards are for out-of-state companies. So if you're a Ohio business selling into another state, you'll have to contact that other state to find out what their rules and regulations are.
Okay, so with consulting services, if they're done virtually and you provide electronic documents, does that include sales tax, or if it's built into the service fee, is that tax exempt?
Yeah, it's consulting is not a taxable service. It's one of our professional services, so it's not taxable. I know there is a little PDF document sent afterwards, which could be TPP, but the true nature of the invoice is to provide that consulting service, which is a non-taxable professional service.
But if I were to write a book in my consulting service, then I'd have to charge sales tax on that, correct?
Like if it was a big book, like, yeah, so then to me, the invoice is more of you're going after the book rather than the service. So
Yeah.
there is some gray area there. You would have to think about what is the true nature of that invoice? Is it
Yeah.
to get the book, to get the document, or is it just to get the professional service?
Right, because like for like a wedding photographer, I think they charge for their wedding books if they create one for you, sales tax, but they don't necessarily charge for their service of taking the photos, I think.
Yeah,
I'm getting
yeah.
into
So
the weeds, aren't I? So-
yeah, the photography is separate from consulting.
Yeah.
But yeah, that is a true statement that it comes to the TPP that's transferred there.
Okay, so there was a question about tax exemption. Does an exemption form ever expire, that exemption form? Can vendor A ask for an exemption form for every invoice? So, yeah, I think you just need to, yeah.
Yeah, that's a good one. It's a very common question. Of course, if you can get a certificate for every invoice, that's good. But our form that I had on the slides there is our blanket certificate form. So if you have a common vendor or if you have a common purchaser that comes to you and purchases stuff every week, you could keep that one certificate and say, hey, this vendor gave me this for all their purchases. We do recommend updating that like once a year. That way you get the correct name and address and phone number and signature on there. But yeah, that's correct. If you have a common purchaser, you can just have one certificate on file for all their purchases.
Okay, so we have a fire extinguisher inspection and service company. How do you handle mobile fee charge?
So that's not one of our taxable services. Just an inspector would be almost, I would think it would fall in line with professional service. That would not be taxable.
If you flip all terrain vehicles to someone else, is that sales tax required?
Yes,
Yeah, okay.
if you are not a registered motor vehicle dealer, you are unable to claim the resale exemption on a motor vehicle. So you should be titling the motor vehicle in your name before you sell it to another person. So yeah, that's a tough one. That law kind of comes in to try to protect the motor vehicle dealers because they go through the licensing and they want to prevent people from just running a dealership without having a dealership license.
Okay.
All-terrain vehicle, there probably is some question on if it's considered a motor vehicle, which needs to be titled. So there might not be the clerk of courts involved, but still you're purchasing TPP and then you have to retitle it. So that kind of is a good one with an all-terrain vehicle that's not road worthy and doesn't have to be titled. I would think that you could claim the resale exemption if you're flipping those.
We have a lawn care handyman service. Do we collect sales tax on the handyman labor if the customer is providing the materials for the repair?
So this is a tough one because we do have construction contract when it comes to real property. So real property is, something you pay tax on, which is kind of like your house and stuff like that. Anything that's incorporated into real property does not retain tangible personal property classification and then goes into real property. So that handyman does not charge sales tax on its labor because it's repairing or redoing handyman work or for real property, but they do have to pay the sales tax on the materials that they purchase from the Home Depot.
But if the homeowners do purchasing the materials, then they don't have to charge the
Yeah, they're just their labor working on real property. It would not be a taxable
Okay.
service.
So what about eBay?
So eBay is a marketplace facilitator, kind of similar to Amazon or Wayfair. They collect sales tax on your behalf. So if I'm making crafts at home and I sell my crafts at a craft show, and then I also sell my crafts online through my personal website, I'm charging and collecting sales tax for the both of those. However, if I'm posting my crafts on a marketplace facilitator like eBay or Amazon or Wayfair, those marketplace facilitators collect and remit the tax on the business's behalf.
So eBay, no. Flea markets, yes. You need a
Yep.
vendor's license for. And then our business sells products that require a third-party shipper to deliver them. We charge the customer for the shipping. We charge sales tax on the delivery of products. We know we charge sales tax on the products themselves.
Yes, so the delivery charge would be taxable. It's included in price. So like what we like to say with price is, anything that has to be paid in order for the sale to be complete would be considered part of price, and you would charge sales tax. I do want to note that we do have a drop shipment information release on our website, which is very handy, and that's where it's almost like a middleman where you sell a product to Cincinnati, the person delivers it, that's kind of a bad one. I think it'd be an out of state. Like if you sell a product to Kentucky, the delivery company picks it up in Ohio, drops it in Cincinnati, and then another shipper drops it in Kentucky. It's a drop shipment, and we have an information release on that, and it kind of voids that you don't have to charge the Kentucky tax because it's just drop shipping.
All right. Well, thank you very much. Are there any other questions? All right. Well, as always, SBDC is here to help you start and grow your business. So reach out to us and we can connect you to other resources as well, and especially to the Department of Taxation. So we did have a question about thrift store to eBay, but George, if you stay on, we'll answer that. But I'm going to stop recording here, but we'll stay on for a few minutes. So thank you so much again.